But it's been a strong performance from Max Healthcare in Q4. They reported their highest ever revenues and profits in Q4. The bed occupancies improved while the EBITDA per bed also expanded. So we have Abhay Soi, who's the chairman and managing director at Max, who joins in now to give us a view on how things are shaping up as we begin a brand new fiscal. Abhay, thanks a lot for joining in. Appreciate your thoughts. I wanted to start by asking you about the occupancies, because this quarter, the occupancy level was in excess of 77%, which is very good. But can you tell us what has the contribution been from, say, medical tourism, from surgical revenue, and what kind of occupancy levels do you think you can maintain in FY24?
So, Sonia, we've had a 77% occupancy, but we've also opened 100 new beds. So that's about a 3% plus increase in capacity. So it's obviously 77% on a higher sort of this thing. Going forward, we are in about 6 months, we are expecting another 300 beds to come on stream. We've also said there's another 60 to 70 beds that we will be unlocking internally. So that's about, let's say, about 350 beds, which is another 10% capacity. So I don't think we have a capacity issue over here. And, we've also, some of our beds are suboptimally utilized because of institutional business, and we'll be distilling those beds. So I think due to combination of these things, we don't have an issue as far as occupancy is concerned, at least. And then the margin, you'll always find that, previously in certain quarters, we've also operated at about 80-81% sustainably. We've done that through COVID and some after COVID as well. So I think you can always ilk up a few percentage points on occupancy. And as you're aware, in 2025, we have another 1,000 beds coming through, and this is all largely brownfield expansion, right, to elevate business need and requirement of capacity.
So you're saying you have 300 beds coming up in the next 6 months, and I'm just trying to understand what would this mean in terms of an average revenue per occupied bed that has already expanded to about 70,000 rupees. Is there scope to improve it further?
I answer this question every quarter because, this is yet again highest quarter. But yes, let me sort of guide you to the fact that at least 30% of our beds are catering to institutional business, which is less than 50% of our regular business ARPOBs. And as we distill, you'll see the ARPOB numbers move up. Secondly, even at the EBITDA level, the big advantage is that you have about 85% of this incremental revenue come through to EBITDA. So you will have an increase in EBITDA per bed because of which as well. And most, I think importantly, what we've been encouraged about with is the sort of a brownfield that we're doing. As you're aware, the 2,900 beds that we're building, we're in the process of constructing them as we speak. 80% of that or 85% of that is brownfield. We just opened our first brownfield in March, on the 1st of March, Sonia, at Shalimar Bagh Hospital. It broke even within the first month. Not only that, the EBITDA margin from those incremental 100 beds has been 35% compared to 28% for the rest of the organization. So the huge operating leverage that you get from brownfields is phenomenal.
Hi, good morning, Prashant here. So for FY24, so EBITDA ex COVID-19 vaccination numbers for FY23 grew 25%. What's your estimate for FY24?
The vaccination numbers?
The EBITDA, operating profit number for FY24. What kind of growth can you do in FY24?
So I don't give guidance. I stay away from giving guidance as far as EBITDA margins or EBITDA, or revenue for that matter.
Would it be in this, would it be 20% plus? Without getting into specifics, would you maintain what you've done in 23?
Well, we hope to maintain what we've done in 23, but, I'll tell you something. A very important aspect I want to sort of bring to bear on behalf of the industry, on the behalf of Max Healthcare. I know you haven't asked me that question, but 3 years back, when we listed the company in 2020, one of the biggest critiques of the hospital sector was that it's not free cash flow positive. And, you need to keep sort of reinvesting in this business and so on and so forth. this year, at the end of this year at Max Healthcare, we've had a 1,637 crore EBITDA, but 80% of that has translated to free cash flow. We had free cash flows of 1,281 crores versus a 1,630 crore sort of EBITDA number, which has encouraged us to give our first maiden dividend. So look, I think, you're seeing a decadal sort of opportunity within the healthcare sector. I'm not only saying on behalf of Max, I think the entire sort of sector for that matter.
No, then congratulations, Abhay. The only thing is it's the nature of the business, right? I mean, capacity, you operate at a certain capacity, the capacity becomes full, you have to add beds, buy hospitals, and then you see another big step up in overall numbers, and then you operate at that level, and then there's another phase. I mean, I guess that's the reason why, that question on free cash flows comes up. But congratulations once again on that particular point. Abhay, I just want to quickly get your thoughts on the international patient business. You've always said that that is improving, even though the patient flow from an important market for you like Afghanistan has been, next to nothing. I think you're already at pre-COVID levels. Can you give us some guidance how that will look in 24? Will that continue to improve?
No, absolutely. I think, look, we are a little beyond pre-COVID levels, but I think we are nowhere where the opportunity set is. And I've sort of keep saying this is not an opportunity for incremental growth, but you can have exponential growth because the sort of comparative advantage that we have, really no other nation in the world does. And I think even the government is getting supportive about it. So, perhaps not in the immediate short run. And you'll see a great sort of growth in the short run as well. But I think you're going to see phenomenal in the medium run. With Heal in India and all the sort of support that we're getting from the government, it's really going to pay off in spades.
Sure. You have a large pile of cash on the books, over 700 crores. What is the plan in terms of utilization of that cash? Are you looking to do any fresh capex, anything else that you have planned?
So, interestingly, our 2,900 crores of capex that we are doing, that a cost of 4,500 crores. Now, this is over the next 3 to 4 years. This equates to 50% of our free cash flows over the next 4 years. So that leaves us our entire free cash flows. It leaves us our ability to leverage. We won't shy away from leveraging up to 2.5 times debt to EBITDA. So that gives us a war chest of $500 million or more without sort of, breaching any of those covenants that we've created for ourselves. So yes, I think it's entirely for inorganic growth, and we want to do it selectively. We want to do it keeping fiscal discipline in mind. We have an ROCE of 36% cash on cash across the portfolio. Whatever we do, we need to be sort of mindful of that. And we look at about a 20% plus ROC visibility in 4 years. So that's the way we sort of look at. That's the fiscal discipline we'd like to maintain.
Abhay, just one last question on care hospitals. I understand that the matter is in court, but anything you'd want to tell viewers, investors? That could, of course, that it was being seen as a big one if it were to go through, but what are your thoughts there now?
Look, we are suing TPG for specific performance, and the matter is sub judice, as you're sort of aware. So I don't want to expand upon it. But perhaps in a few weeks when it's sort of the dust settles, I can talk about it.
All right, fair enough. Abhay, thank you very much. Always a pleasure speaking with you. Appreciate you joining in with that perspective. So that's Max Healthcare with, conversation around FY23 numbers and, of course, a fair bit about FY24 and how things may look. Stocks perked up, actually, from the time that we started the conversation. It's up about 1.6%.